It's a familiar story. You check your mail, find your monthly student debt bill, and it's way too much for anyone to afford. Trust me, you're not alone. Nearly a fourth of all people repaying their student loans are at least 1 month behind. But if you fall too far behind, you're placed in default. That's when you haven't made a payment in at least a year. Every day, more than 3,000 people will go into default on their student loans. That's one person every 28 seconds. Being in default on a student loan is a serious matter, and we're going to talk about the consequences of it. But more importantly, what to do about it. This is especially important around tax time because it allows the Department of Education Student Loan Bank to take away your tax returns. Elizabeth Warren summed it up best. Student loan debt collectors have power that would make a mobster envious. Here are some of the things the Department of Education Student Loan Bank will do if you go into default. First, your account will get sent to a student loan debt collector, and they're going to say your entire unpaid balance of your loan and any interest is immediately due. Not just your monthly payments to bring the account current, but rather the full balance of the loan. The student loan debt collector will then report you as in default to credit bureaus, which will damage your credit rating. After that, the student loan debt collector has the ability to garnish your wages or Social Security. Then, around tax time, the student loan debt collector can garnish your federal and state tax returns to make up for what you owe on your student loans. This means that the Internal Revenue Service can take your federal and state tax refunds to put it towards any of your defaulted student loan debt. And that's why we're talking about this today. If you are in default and expect a tax refund, that refund is probably not coming. To avoid having your tax refund taken away, you just need to get out of default before you file. An extension to the filing deadline is available just by asking. It's IRS Form 4868 and available at irs.gov. Then you have some extra time to get your loan out of default before you file and try to claim your tax refund. After you file for an extension with the IRS, you need to get out of default quickly. Here are 2 ways that you can start the process today, but we can explain all of this in more detail at AFT's website, www.forgivemystudentdebt.org. You can only do each of these once, so make sure you've got a plan in place for how you're going to pay your student debt before you take action. The first and usually best option is to consolidate your loan. This is the quickest way out of default and moves you directly into an income-driven repayment plan. You can consolidate your federal student loans into a direct consolidation loan, even if you only have just one federal student loan. You just need to go to studentloans.gov, and it'll take about 30 minutes to complete the form. You can find important tips to help you navigate the loan consolidation process under the How to Consolidate Your Loans tab at forgivemystudentdebt.org. After your form is approved, you'll have a new loan that isn't in default and will be enrolled in an income-driven repayment plan, where your monthly bill is based on how much you earn and your family size. The second option is called Rehabilitation. This process takes longer, but it's a way out of default. To rehabilitate a federal student loan, you and your student loan debt collector must reach an agreement on a reasonable and affordable repayment rate, in which you'll have to make 9 out of 10 on-time payments. They calculate the amount of your 9 out of 10 on-time payments using the income-driven repayment plan formula. If payment amount under the income-driven repayment plan is a $0 monthly payment, then you'll be required to make a $5 monthly payment. It's important to know that any garnished wages, tax returns, or Social Security earnings are not going to count towards these repayments. To apply for rehabilitation, you'll just need to contact your student loan debt collector. Explain that you want to apply for rehabilitation on your student loan. Debt collection and servicing companies have been repeatedly found guilty of misrepresenting information to borrowers. Whenever you speak to anyone from these collection agencies, get the representative's name and title and note the date of the call. Ask the representative for a summary and confirmation of any changes to your loan in writing, but you should still take your own notes of what you discussed and what you agreed to. After you've made 9 on-time payments, your loan will be out of default, and you should ask to enroll in an income-driven repayment plan. Collectors will often try to move rehabilitated loans into a more expensive repayment plan, which could cause your monthly payment amount to jump significantly. Be sure to track when you've made your 9th rehabilitation payment so you can immediately contact your servicer to enroll in the best repayment plan for you. Once you're out of default, send in your taxes. If you're eligible for a return, you should get it without any fear of the Department of Education Student Loan Bank withholding it. It's that simple. Again, visit www.forgivemystudentdebt.org for a step-by-step guide on both consolidation and rehabilitation. But know that you shouldn't let Betsy take your tax return when you've got options. Thanks for watching.